The football season has come to an end, but that doesn't stop the rumours coming thick and fast around the transfer window. In particular, last week, the headlines were dominated by Chelsea and Saudi Pro League clubs. But why are Chelsea players in particular signing or potentially signing for PIF-owned Saudi clubs? Is Chelsea selling players to buy more or to comply with the FFP rules? My name's Neil Wood and I'm a football finance professional. This channel, Football Finance Professionals, looks to educate you about football finance using my experience at the top of the game. As a former finance professional at City Football Group, I'm here to share my experiences with you. So if you want to learn more, why not hit subscribe? If you like the video, hit like, share with your friends, and make sure you leave your comments about Saudi Arabia, Chelsea, and the transfer window down below. And if you want to learn the answer to the question, is Chelsea selling players to buy or comply? Make sure you stick around to the end of the video. Firstly, let's understand the context of PIF-owned Saudi Pro League clubs. PIF, being Saudi Arabia's public investment fund, now owns 75% of 4 Saudi Pro League clubs, being Al-Nassr, where you'll find Cristiano Ronaldo, Al-Ittihad with Karim Benzema, Al-Hilal, who were trying to recruit Lionel Messi, and Al-Ahli, the 4th PIF-controlled club. Overnight, the PIF have created a multi-club ownership model in a domestic league which wouldn't comply with Premier League rules or many of the other rules around Europe. However, the rules that apply around Europe do not apply in Saudi. They make their own rules that apply to their own domestic league. So the fact that they have ownership of 4 clubs isn't necessarily breaking any rules within Saudi Arabia or wider competitions, until such time that those clubs look to compete in other international competitions against each other, and that could pose a future problem. But let's look at this from the Premier League's perspective. There's been plenty of rumours around the transfer activity between Chelsea in particular and the Saudi Pro League clubs owned by PIF. But that detracts from the first question and primary concern of the Premier League. Is there commonality of control or significant influence or key management personnel between Chelsea and Newcastle? Newcastle is also owned by PIF and now forms part of the multi-club ownership model operated by Saudi Arabia's public investment fund. The Premier League rules are very clear that no one person or one party or one legal entity can control or significantly influence more than one club within that competition, which is contrary to what we now see in the Saudi Pro League. And if it can be proven that PIF owns an interest in Chelsea, directly or indirectly, has common key management personnel, or has a significant interest in both football clubs, that would be a clear breach of the Premier League rules as it currently stands. But how could that possibly be the case? Well, 60% of Chelsea is owned by Clearlake Capital, a private equity firm based in the US. And although it's not clear exactly the ownership model of that private equity firm and whether the PIF has a stake in Clearlake Capital, it is rumoured that Clearlake Capital are managing billions of pounds of PIF money as part of its ongoing business. So there is a customer and service provider relationship between Clearlake Capital and the PIF. That doesn't necessarily mean that the PIF has an ownership stake in Clearlake Capital. It means that Clearlake Capital are managing the PIF's money as part of a fund with multiple other investors. And the two things are different, which is where some people can get confused. That's not to say that PIF doesn't have a controlling interest or significant influence over Chelsea Football Club indirectly through Clearlake Capital. That ownership structure cannot be seen publicly. But it is in the interest of the Premier League to get to the bottom of this, and I'm sure they will be asking further questions of Clearlake Capital and the PIF links. One of the rules in the Premier League is commonality of key management personnel. And we look to the directors or those charged with governance when it comes to looking at the definition of key management personnel. And Jonathan Goldstein has been known to be linked to the PIF with common investments through Kane International, an entity where he is CEO. He is also a director of Chelsea Football Club, and therefore Kane International will be an associated party of Chelsea Football Club. So any transactions between Kane and Chelsea would be captured as part of that associated party rule, which is very similar to a related party of IFRS with enhancements for Premier League specifics. And what does that mean? Well, a related party transaction or an associated party transaction will be subject to a fair value assessment automatically under Premier League rules. So any cash that flows between associated parties or related parties under IFRS terminology will be subject to a Premier League fair value assessment, meaning an understanding of whether that transaction or transactions have occurred at arm's length. Arm's length being the value that would be agreed between two unrelated parties. And that's a matter which is quite judgmental. But we're not talking about transactions between Kane International and Chelsea. We're talking about transactions between Chelsea and PIF-owned football clubs. And that doesn't necessarily mean that there's an associated party definition that's being met through the Jonathan Goldstein or any other of the links that we can see. But does that matter? Well, the Premier League rules have been updated recently to include associated party transactions which are subject to fair value assessments, but also threshold transactions, which are any transactions, including those of player registrations, which exceed £1 million in value. So whether there is a link between Chelsea and the PIF via Clearlake Capital or via Jonathan Goldstein or any other link, quite frankly, it doesn't matter. Because whether the transfer of a player from Chelsea to a Saudi Pro League club is deemed to be an associated party transaction or not, any material transactions which are defined as above £1 million by the Premier League will be subject to a fair market value assessment regardless of an associated party dealing. Now, Chelsea have obviously drawn attention to themselves by selling multiple players on one day and multiple players in the run-up to the end of June. And with so many players going to Saudi Arabia, they've obviously drawn attention from the Premier League in particular. And multiple pundits and others commenting on the unfairness of the situation. And with the existing relationships, whether they're deemed to be associated party transactions or not, it doesn't matter. However, something is likely to be done. And that something will be a fair value assessment of all threshold transactions in excess of £1 million. But what's happened so far? At the time of recording this video, there have been several transactions rumoured and confirmed. N'Golo Kante has been confirmed to move to Al-Ittihad on a 3-year deal for a free transfer from Chelsea. So Chelsea had nothing to save or gain because no transfer fee would be generated because he was eligible to walk away under the Bosman ruling at the end of his contract for free. So the only saving that Chelsea would see would be future salaries that would be payable to Kante in the next season or thereafter. But since he hasn't re-signed, there's nothing to save. That transaction will not be assessed for fair value because it's not in the Premier League's remit to assess the wages that N'Golo Kante will be paid by the Saudi Pro League. Hakim Ziyech is reportedly linked with Al-Nassr. It's been reported that the 30-year-old has agreed a 3-year deal with the club for an unknown fee at this stage. However, rumours are circulating at £8 million, which doesn't seem to be overly generous or something that suggests a potential fair value issue. The player had 2 years remaining on his contract with Chelsea, having been acquired from Ajax, so there will be some residual value sitting on Chelsea's balance sheet that they'd look to shift and hopefully create a profit on in a potential deal. That profit, if any were generated, would contribute to the 22-23 FFP calculation, assuming it was completed before the end of June. Koulibaly is another transaction that is being touted as something that could be more suspicious by those doubters of Chelsea. The fee here could be challenged due to the player's performance with Chelsea, who only signed last year for €38 million on a 4-year deal. It's rumoured that he will move to Al-Hilal on a 3-year contract and join Ruben Neves from Wolves. Transfermarkt currently holds his valuation at €15 million, and not that that's necessarily the true fair value. It's a good indication of what someone who is theoretically independent assesses the player's value at. So the Premier League will be taking a good look at that particular transaction. So the previous two that we've discussed will form part of that fair market value assessment by the Premier League. It's rumoured that Edward Mendy will join Al-Ahli on a 3-year deal, having 2 years remaining on his Chelsea contract. And again, the player will have a residual balance on Chelsea's balance sheet, with a transfer fee dating back to 2020 of £20 million that would have been amortised to the end of the season. We don't know yet what the transfer fee is suggested to be, but there is likely to be a transfer fee associated with that player in particular because of the remaining life of the contract. There are other players linked with Saudi Arabia, including Pierre-Emerick Aubameyang, who is reported to have rejected an offer from Saudi Arabia, and Callum Hudson-Odoi, who, if sold to any club, including Saudi Arabian clubs, would constitute almost pure profit for Chelsea, because the player has come through Chelsea's academy and they haven't incurred any transfer fees which would have been capitalised, other than those agent fees which would have constituted club services. So again, if that transaction were to happen, it would draw the attention of the Premier League to ensure that it is at fair value. Having said that, an academy player at the age of 22 who hasn't moved for a fee in the past is going to be difficult to judge when it comes to a fair value assessment. Based on what we've discussed so far, it doesn't appear like there's anything particular to note when it comes to any inflated transfer fees. But we will keep an eye on that and comment below if anything has happened in the interim period to suggest that there is an issue with regards to fair market value. But if this isn't the driving force for Chelsea to transact in the transfer market in such a manner, then what is? Well, obviously, it's to remove the players' wages from the books. And there's no saving to be had in 22-23 for that, but there will be a future saving for 23-24. So why are all these transactions happening so quickly if wage savings are the only driving factor? Well, that's the interesting point. Chelsea's financial year end is the 30th of June, and any transactions which do generate a profit before then will contribute to the financial results and FFP calculations in the Premier League, known as profitability and sustainability, for the year ended 30th of June 2023. That includes the 22-23 season, which has been an investment season for Chelsea and one which has had some unexpected costs for managerial transactions which weren't expected at the start of the season, and some less than successful on-pitch performance. So Chelsea's financial results will be substantially behind budget, and it looks as though there's going to be some shortfall that needs to be made up. But is there a risk that Chelsea are going to breach the Premier League's profitability and sustainability rules? Well, they state that £105 million worth of losses can be made over a 3-year period, subject to what's called secure funding, which is broadly equity injections from shareholders. Now, over that time frame, Roman Abramovich has been in charge, and now Todd Bowley and Clearlake Capital will be in charge of the club. But what's happened financially? Losses before tax in the previous 2 financial years total £263 million, being £114 million and £149 million of losses before tax in the previous 2 financial years. We don't know what the financial results of Chelsea will be in 22-23 and are unlikely to find that out until around about March 2024, when the financial statements must be submitted to Companies House. So given the significant investment in both players and managerial changes with a reduced on-pitch performance and lack of Champions League qualification, what does that mean for Chelsea? Well, we can forget about the Champions League miss because that won't impact the 22-23 season. They could have performed below budget, but we will not know what that budget would be when it comes to their current season or their 22-23 expected Champions League performance. They will definitely have budgeted for a top 4 finish, so having finished further down in the Premier League will have hit them financially, and they wouldn't have expected to change so many managers at such a substantial cost. All that combined with huge amortisation and wage bills doesn't look good for Chelsea on top of historical losses. But what goes in their favour is COVID. COVID-19 adjustments approved by the Premier League mean that those losses can be offset by certain costs that have been incurred within the quoted £263 million of losses in the previous seasons. So there's some hope for Chelsea, but none of us will ever be able to calculate what that figure is. The Premier League will. And Chelsea will know exactly where they sit now and in the run-up to the end of the season, which will be forcing their hand to try to remove some players at a profit before the end of the financial year. But are the transactions that we've discussed so far a concern from a fair value perspective? Well, as we said earlier, they are not significant in terms of their value. It's not as though they've been inflated by 5 times what people would expect them to be. So there will be some assessment that's being completed, but it doesn't appear there's anything particularly underhand from an outsider looking in. But what factors will the Premier League look at to assess the fair market value of a player registration? This is a complex and judgmental matter. There are so many variables when it comes to trying to value a player registration. First of all, you can look at the player's age in combination with the length of their remaining contracts. As players move towards the end of their contract, their value diminishes due to the fact that they can walk away on a free transfer under the Bosman ruling. So clubs tend to adopt a straight line amortization from the point of acquisition to the end of the contract. And acquiring clubs know full well that there is a potential free transfer to be had at the end of the contract. So with only 1 year remaining on a player's contract, their value is lower than if there were 2 or 3, and so on. A player's performance in their current squad or club is also a consideration, along with their injury history, their position, and other factors which would be more judgmental, such as their ability to fit into their new squad or potential new squad. And also factors like the buying and selling clubs can come into play evaluations. Clubs with perceived deep pockets may be offered a higher price than any other club because there will be a perception that that club can afford to pay more than any other club. And the same applies in reverse. If the selling club is perceived to have deep pockets, the buying club may take advantage of that or any other situations that arise. And it's quite clear that Chelsea could be perceived as a club in distress, having a high wage bill, a large squad, and a player registration balance which is being amortised into the P&L, which puts the club at risk of breaching financial fair play. And other clubs will be aware of that, and therefore shouldn't be overpaying for any players. So if Chelsea aren't overinflating transfer fees, then what's the benefit to selling their players? Well, this is where the sell to buy question comes in. And the benefit to Chelsea is to offload future wages. And in a worst case scenario, where there is a link proven between PIF and Clearlake and Chelsea under a common ownership model, then this would be known as a multi-club organisation. And that would be no different to those already in existence, such as City Football Group or Watford's multi-club organisation, or that of Red Bull. So there's nothing wrong between transacting between these multi-club organisations. That isn't against the rules, as we can see with other parties. If there was a link between the PIF and Chelsea, then any transactions between Chelsea and Newcastle would come under greater scrutiny. And in fact, that would be a greater problem for the Premier League to deal with, despite the fact there may be no transactions between Chelsea and Newcastle. Because of that maintenance of competitive balance and a desire from the Premier League to ensure that more than one club is not controlled or significantly influenced by the same party. We've got so far in the video, and if you're still with us, thanks for watching, but we've not mentioned UEFA FFP compliance. Everything that we've discussed so far has been to do with the Premier League. So why is that? Surely the UEFA compliance is more difficult because the rules are more stringent than that of the Premier League, with lower loss-making figures and a soft wage cap that needs to be assessed. Well, for Chelsea, unfortunately, or fortunately, if you see it that way, do not have to comply with UEFA rules next season for 2 reasons. The first being that they didn't qualify on sporting merit for any UEFA competitions, being Champions League, the Europa League, or even the Europa Conference League. That means that Chelsea do not need to apply for a UEFA licence and therefore do not need to comply with any of UEFA's rules for next season. In addition to that, we're currently in a period of transition between old FFP, or financial fair play from a UEFA standpoint, and financial sustainability regulations being the new term or the new set of rules under UEFA. And that transitional period means that 22-23, the year that's about to come to an end, covering the 22-23 season, will not be assessed for any club across Europe. The financial results will be reported to UEFA, but no assessment will be made. That season forms the basis of the next monitoring period going forward, as UEFA have made a clean break from the COVID-impacted years, in contrast to that of the Premier League. So why has this story created so much interest? Well, quite frankly, it poses a threat to the Premier League's structure, with Saudi Arabia potentially acquiring talent en masse from the Premier League. And it's generated multiple comments from pundits and many others about the integrity of the competition, with some people demanding all transactions between Saudi Arabia and the Premier League be banned until we can understand the complexities of this matter. But with European football and the Premier League in particular contemplating the salary cap, and with lucrative offers from the Saudi Pro League, it's no wonder that players are being tempted to move there, whether they're at the twilight or in the prime phase of their career. After all, being a football player is a finite career, one with a short shelf life and a long life to live once those football boots have been hung up. But with the likes of Ruben Neves already moving in his prime at the age of 26, and if Bernardo Silva does make a move at the age of 28, having won a treble with Manchester City, that may be the trigger point for people to start worrying about Saudi Arabia. And that would suggest a difference between Saudi Arabia's attempt to attract talent and the failed Chinese Super League attempt to attract European talent into Chinese football. The difference that we already see is that arguably the best talent in the world in Cristiano Ronaldo and Karim Benzema already compete in Saudi competitions. And we're now seeing a tier below those older players being recruited, and even those that would be defined as competing at the top of the game in their prime. So that, combined with such a volume of transactions in a short time frame, could accelerate the desire of the Saudis to have a top 10 league in the world. And surely it's time to take them seriously. The other complexity to all of this is a potential sale and leaseback of any of the players that have been acquired. But that's a topic for another time. So if you're interested in that complexity, make sure you subscribe for future videos. So in conclusion, are Chelsea selling to buy or to comply? In our view, it's likely to be a little bit of both. They will look to invest again in the summer transfer window and see how things go, and potentially invest again thereafter in the upcoming winter transfer window. As we've mentioned earlier, it's difficult to understand the Premier League's FFP position, but the acceleration of certain transactions into this financial year suggests there could be a problem that's looking to be dealt with. And as Chelsea look to the future, they will be concerned and have one eye on the 23-24 financial results and be looking to ensure that they can reinvest as a result of selling or disposing of some players this summer. This will be a particular concern due to a lack of Champions League money coming into the profit and loss accounts, but also a concern from a UEFA FFP or financial sustainability regulations perspective, because there will be a desire to compete in that competition in the future, and therefore compliance with those rules will be high on the agenda. So our educated guess is that Chelsea are selling to buy, but also selling to comply with the Premier League rules in particular, which is what's accelerating the need to dispose of some of these players at a profit before the end of June 23. But what are your thoughts on the Chelsea situation? It's obviously very complicated. Make sure you leave your thoughts in the comments below. If you like the video, hit like, share the video with your friends, and please subscribe to support the channel. My name's Neil Wood and I'm a football finance professional. Thanks for watching.